everybody. Luke Broyles here, and I am really looking forward to today's discussion. So, typically with my videos, you see me interviewing somebody that is a Bitcoin expert, somebody that's been in Bitcoin a while, or it's a rant that I'm just giving about Bitcoin. But this is one of the new people to Bitcoin series, and so I have a very special guest, Kelton. Thank you for joining me. I'm glad you're willing to take the time.
Yeah, thanks for offering this.
Yes. Now, normally when I introduce you or give a background, I say, this is my friend, right? In this case, this is not only a friend, Kelton, you are the first family member of mine that has ever been willing to come on a Bitcoin podcast. So it is especially special to me. And also because you're 18, you're also the youngest person I have ever interviewed. A lot of people think that Bitcoin is mostly gains interest from young people. And in my experience, that's not the case. So anyway, thank you for being the first family member and the youngest person I have ever interviewed on here. So yeah,
Well, I'm honored.
good, good. Well, I know very little about what you would like to know, what you do know, what you don't know, or what your interest level is um, at all in Bitcoin. You're an engineer, yeah, and a quite good one from my understanding. Could you give a little bit of background to everybody? What your interests are in engineering, and what knowledge, understanding, or interest you have in Bitcoin, if any, and ultimately, to help me understand what at the end of this discussion today are the things that you would like to learn or the main questions you'd like to have answered.
Yeah. So I'm really heavily interested in engineering. Um, I'm not technically an engineer yet, but I'm going to be starting engineering soon at college. Um, and I'm mainly focused on mechanical engineering. I've been kind of involved with that as long as I can remember, with members of my family and just robotics teams and stuff like that. So really big interest in engineering. But with engineering, I'm also interested in like emerging technologies and new things that are happening. So I feel like that's kind of why I'm interested in Bitcoin now. Is like it's I know it's not entirely new now, but I feel like it's still new enough that a lot of people don't um, really totally understand it, and I still don't understand it. So that's why I'm looking forward to learning about it because my knowledge level right now is pretty low on Bitcoin, and I mainly want to learn how to invest in it for the long term, and not trying to do like a get rich quick with trading real fast and all that because I definitely don't understand enough for that level. But I just want to know more about the theory of Bitcoin and why you would say it's a great investment, for long-term use.
Sure. Right. Okay. Awesome. So mechanical engineering. So for those of us watching that would like to get a better idea what specifically that means, so you're building physical things. You're not so much well, you do a bit of coding and things like that, right? On like the digital side, right? Like what do you do, or what is your focus and passion in mechanical engineering, and what's less so of the interest?
Yeah, so I only code because I have to in order to make my mechanical systems work because I hate coding. Um,
Me too. Me too.
yeah, so I love like designing the thing physically and building it and then wiring it up. So I love the mechanical design and the electronics. And then I always dread when I get to the coding because that's when everything starts breaking and it's not working in a straight line anymore. It's all over the place. So yeah, my main focus and passion is on design and physical mechanical systems. And then I do the coding to make them a little bit more functional. But yeah.
Cool. Okay. Yeah. I only took one coding class in college, and it drove me nuts.
Yeah.
It was so frustrating to me because like it doesn't work, and I'm like, why is it not working? Like just if I'm building something in my hands, I can like see the darn thing, right? And I can
Yeah.
like, see why it's working, not working. Oh, this not, But anyway,
Yeah.
so lo and behold, now here I am, all these years later, and I I basically live on my computer digitally. So anyway, funny how that works. But
Yeah.
okay, great. Well, I think that's wonderful. I think it's, I think that's really important, because obviously as an engineer, that, if any one part of the system is not working, then the whole machine doesn't really, it's not really effective, right? And so I think that's good for just engineers in general to, even if they, you're going to have your deep focus with your mechanical engineering, but I think you're totally spot on that I think it's important to also have a, if you're going to become a level 10 mechanical engineer, like I think it's good to like have a level, at least like a level 2 or level 3 or whatever, understanding of the other, things in the world that are going to change it, right? Because whatever changes happen in Bitcoin or AI or whatever, like surely are going to have some impact probably in what you're doing in the future, right? And your job. So at least that's the way I look at it. I don't know if I'm assuming you look at it relatively similar.
Yeah. Yeah, exactly. Yeah.
Okay. So what do you know? If you're saying you know very little or you've heard very little, and that's understandable because you're barely older than Bitcoin itself.
Yeah.
Yeah, and me too, I guess, for that matter. But what do you know about Bitcoin? What have you heard about Bitcoin?
Yeah. So I guess I'll kind of give you my like understanding of it, my general understanding, and how I've tried to simplify it so that I can kind of understand it better. So right now, I understand it as a digital, well, at least if you're in it for the long term, like a digital form of gold, you know. So it's you're investing in that value that's gonna. I mean, it's very volatile. I've seen, but you just I don't know. It's not. I'm very. I'm not exactly familiar, and I can't go in depth, but I just understand it as a like a digital gold where you can invest in it, and then as that value goes up, the
Right,
the value of your assets is increasing as well.
right.
Um, but I also understand like the like mining and general parts of details on that, like the computer algorithms that you have to use to. Um, I'm not quite sure how to help you with that. Oh, sorry. Computer algorithms that mine these cryptocurrencies in order to gain, the
Something.
yeah, something, and that's what I am not
Something
exactly.
happens with the computers, and then you get
Yeah,
that magic internet money,
yeah.
right?
So it's I know a lot of the details, but they're not connected, and I just yeah. So
Right.
I'm not entirely familiar with
Well, that is okay. That is very normal. I think Bitcoin is one of those things where because it's been around a while and a lot of people have heard about it, and a lot of people had opinions, and most people I meet, feel like they should know more, and they worry about that they don't. And frankly, a lot of people in Bitcoin don't even understand all, right? They just download an app and they just buy something and then they see it go up and they're like, hey, this is working. I just don't question it, right? So
it. Yeah.
anyway, so yeah, happy to go through that. I guess my first question is, okay, you've heard Bitcoin is kind of like a digital form of gold. Um, if and again, any answer is fine, any technical or any high level view, whatever. Why do you think, if you believe Bitcoin's digital gold, why would you articulate it as digital gold? And if you aren't yet convinced one way or the other on that, why do you think other people view it as digital gold?
Okay. So so you're asking why I view it as digital gold?
Right. And you may not view it that way. You might have just heard it that way. But I'm curious, why do you think, do you have a guess as to
Yeah.
why people might view it that way? And there's no wrong answer. I'm just curious.
Okay. I think I mean it makes sense to be like gold because it's a limited resource, and
Mhm.
I think that's kind of why it's compared to gold because it's limited and the more um the more people that own it, I guess the value is going to go up. I
Mhm.
think that's how that works.
Yeah.
Because it's limited, so it's getting more it's getting more scarce as more people own it. But yeah, so that's my understanding of why
Yeah.
it's compared that way.
Sure. Okay, yeah, okay, great. Yeah, I'll try to explain that a little bit later on. I think it'll be really helpful and hopefully connect some of those dots.
Yeah.
Okay, great. So gold itself, then, if Bitcoin is good because Bitcoin's similar to gold, then of course the question is, why is gold good, right? Like, do you have? And again, if you haven't thought about it, that's totally okay. But I'm just curious. The have you given any thought as to like why like gold has a lot of value. Gold is worth way more in the world than Bitcoin. Is worth way more than for roughly 10 times more than that of Bitcoin. So like if Bitcoin's good because it's digital gold, why is gold good? Why do you think that people give a lot of value to gold beyond the fact that it's scarce? I mean, obviously it's scarce, but you can't do anything with it, right? I mean,
Yeah.
you can put it in a watch. Like why do you think people like gold so much if it's a finite thing or a scarce thing that you can't really use practically?
Well, I don't, I would, I don't know. I mean, I think I'm not really sure. It's not like it's not something you're not buying it to use it in a like an industry or anything. So it's just you're just buying it for the value. So I'm sure there's a reason, but I'm not familiar with what the reason is.
No, no, that's good. And most people, like three or four times, our age haven't thought about this, So I know very few 18-year-olds, obviously, that think about this. So my explanation of why gold would have value, like Bitcoin aside, like forget Bitcoin, right? A lot of people, I think, when they approach Bitcoin, they try to do the technicals on it first, but really, kind of like an engineer, we got to start the first principles and build our way up, right? So, what I would say, why does gold have value? It would be a larger question. Why does anything have value? And, for us, for people, right, the things with the most value to us are the things we need to live, right? Like, I got a cup of water right here. That's pretty valuable to me, right? A bed to sleep, food to eat, all those like that's the stuff I care about, right? Like nobody actually cares about the equity in their home. Nobody actually cares about their nobody actually cares about Bitcoin. Nobody actually cares about the gold. Nobody actually cares about the robots we're building. Nobody actually cares. Like at the end of the day, the only things we care about are, can the robots do things for me to help me live, right?
Yeah.
Can gold or Bitcoin or stocks or like everything is a means to the end of helping us live, right?
Hmm.
So that's at the end what people care about. And so then of course that question becomes, why buy gold, right? Like, we couldn't even use gold in computers until there were computers. So for thousands of years, like gold's been this thing. And the reason why gold has had this value is precisely for the counterintuitive reason that it can't do anything. Gold was the most widely distributed, scarce, and finite material of the ancient world that didn't have any utility value. And what I mean by utility value is like you could consume it, right? Oxygen has utility value, right? I'm breathing it in as I speak, right? Water, food, shelter, weapons, all those kinds of things help us live, right? But
Yeah.
gold couldn't do any of that. And the reason why that's important and the reason why that gave that a lot of value in the ancient world is because if something has a utility value, it has a huge incentive for people to make more of it, right? Uh,
Hmm.
if we put ourselves 3,000, thousands of years ago, right? You can't have uh, you can't, it's not logical to invest in a cow for the sake of wealth preservation, right? You buy the cow to eat the cow or to milk the cow or whatever, right? You,
Yeah.
you don't buy the cow because you think it's going to 10x in value over the course of your life, right? Obviously because the cow doesn't live your whole life or whatever, but it's also that even if the cow theoretically did, like people will just make more cows, right? And
Yeah. Right.
because people always need to eat, so they'll just keep making more, right? And
Yeah.
so with gold became like basically the last thing people buy, right? Everyone's going to buy their food, everyone's going to buy their house, in the ancient world. Everybody's going to buy the stuff they need, but any excess productivity that the person or the culture makes, they have to save in something. Like if you have excess energy, right, like you got to do something, right? Like with the, like with the living organism, if you are eating more calories than you're consuming or than you're using, like you're going to build up fat storages, right? And so
Mm.
basically of a ancient culture, you had all the technologies being built by engineers like, your predecessors a couple of thousand years. You had engineers building stuff like the proverbial muscles helping everybody live, but then all the excess wealth that is created, people have to put somewhere. And what is the most logical place to put it? It's somewhere, it's in something that isn't going to be diluted away indefinitely. And the thing that was the most difficult to do that was gold. It was easy for people to make more copper, more iron, more dirt, or whatever, right? But gold, owning a piece of gold in the ancient world meant, hey, either myself or somebody before me has at some point in time spent excess energy beyond what they needed to live to store it in this shiny yellow rock. So, anyway, does that kind of make sense so far?
Yeah, yeah, definitely.
Good.
Yeah,
Okay, good.
that's actually really interesting to think about. Yeah.
So the irony is that the best form of preserving the fruits of your labor or that purchasing power, and irony, the best way to store it is counterintuitively in the thing with the least utility value, right?
Yeah.
Because if it was based on only what had utility value, the world would be on a oxygen standard, right? Like, if we picked what is the world's money going to be based upon, what is the largest universal need, it would be oxygen. Like there's no second most important commodity. Oxygen is more important than water because oxygen makes up water, right?
Yeah.
So anyway, so that's what gold is, right? That's what people have stored. And so of course the question becomes, okay, it's the fruit of your labor that you've done to store. So why would you buy it holding it in the future? Well, in the ancient world, buying a gold coin or a gold nugget or a flake or a bar or whatever the person could afford, right? It's the idea of owning basically an output of the future, right? Like imagine we're in ancient Rome or Greece or whatever, and let's say in the whole country there's like, a million Roman, or a million gold coins or whatever, right? And just for the sake of example, let's assume there's only the million. What would happen would be that, if you are buying that one gold coin, you're basically buying one millionth of the surplus productivity of the empire or whatever, right? And so if you think that the empire is going to do really well in the future, and you're going to have more engineers, they're going to build more roads, and there's going to be more absolute wealth, then it's probably a good idea to own that gold coin, because owning one millionth of the future Roman Empire is going to be better than the past, right? In the past, people didn't have as much technology, but in the future they will. They'll be, this gold coin is going to buy me more food, water, shelter, whatever in the future, right? And if you're a pessimist and you think that, hey, there's going to be this war, there's going to be this famine, this whatever, if you're a pessimist and you think that bad things are going to happen and we're going to be growing less food, we're going to be growing less, cows or whatever, that's when you want to buy the cows and the food, because you think they're going to get more scarce. So, buying gold and buying like raw materials is kind of like on a spectrum that, if you're trying to own a proverbial share of the future, you want to own the gold because people are going to keep making more cows and more roads and more, barrels of water or olive oil or whatever. But it's going to be really difficult to make more gold because it takes a lot of energy to get gold out of the ground, right? Like, it's a lot easier to make a new cow. The cows will help you with that, right?
Yeah.
But the gold, the gold doesn't grow on trees. So buying gold or selling gold, throughout all of human history is, whether people articulate like this or not, is essentially like a statement of belief or a statement of conviction. And do I think the future is going to have more or less productivity? Does that make sense?
Yeah. Uh-huh.
Good. Okay.
Yeah.
So, of course, I've already mentioned the relative finiteness of gold, but like I just said a moment ago, the thing that makes gold really valuable, additionally, is also that it takes a lot of energy. It's very cost prohibitive for somebody to make more gold, right? Thousands of years ago, you could take a, primitive shovel or whatever, or a pan and go to a river, like it wasn't too difficult, right? Here in America, the gold rush of 200 years ago or so, in California, people that were very early would be able to pick up golden nuggets off the ground or whatever, right? And it was very, very cheap, right? Yes, you had to spend energy walking down to the river to pick up the golden nugget to put in your pocket, but the benefit you're getting for the cost you spent is very good, right? Of course, now, hundreds of years later, with literally every single person having a supercomputer in their pocket that uses some tiny flake of gold or whatever, right? Obviously, like now, it's a lot more difficult to get that same amount of gold. There's still a lot of gold out there, but it's way more expensive now to do that. We still make more gold. In fact, we make more gold every year now than we ever did in the ancient world. But all it to say is that that's another critical component of why people have valued gold throughout history. You're basically buying a proxy, of the idea of owning a share of the future. You buy 1% of the gold of an ancient empire, you're going to own more or less 1% of whatever growth that empire has, right? And stocks are only about 400 years old. I don't know how much do you know about finance? I mean, have you ever had a finance class in high school? Did you ever have one?
Yes, it was
Good.
very basic, but
Yeah.
um, I might know the answer to your question if you.
Yeah, yeah. How much do you know about the history of the stock market and where it started and all that?
Um, I
You don't know, that's totally okay.
I mean
You don't.
yeah, I know, I guess, the big drops and depressions and recessions and stuff, but
Right.
I don't know much detail into those things.
Oh,
I mean, it's probably just
that's
basic.
totally okay. That's totally okay. So obviously we're Americans and we're speaking American, basically our American accent of English. We're speaking English, obviously, right? But before America, before England, there were the Dutch, right? So uh, the Dutch, along with the English, were settling the eastern seaboard of the United States, what's now the United States, many hundreds of years ago, right? Before New York City was New York City, it was called New Amsterdam, right? It was more Dutch than British at a time. So, point is that many hundreds of years ago, 400 years ago or so, the Dutch were the dominant seafaring empire, even more so than the British at the time. And they had the spice trade. You probably heard about that in your history class or whatever. But the problem for the Dutch was that they wanted to monetize. They wanted to be able to raise money and distribute money more effectively. And, again, this is hundreds of years ago, but already by that point, gold was no longer becoming efficient, right? It's basically like, well, sure, you can buy gold to represent the productivity of success and output and profitability of the society, right?
Mhm.
Just out, nobody determined that to be. It's just the incentives of that, right? A squirrel, builds fat in its body because nobody told it to. It's just what happens, right? And if you get humans together and you give them all an incentive of self-preservation, they all trend to um, one thing to represent their efforts or whatever, right? And so, point being that nobody determined gold's going to be the thing, but eventually, because it's a physical, rock, right, and because it's hard to move and it's expensive and blah blah blah, and the Dutch were going very global, having their spice trade everywhere. They had the brilliant idea of, hey, what about instead of you buying or selling gold coins, how about we create this market? And in this market, you're going to be able to buy companies and corporations. And how will we determine what's your rightful ownership? Well, we'll have shares of these companies, right? Basically, if gold represents the physical analog of the excess productivity people make, basically a stock, right? You're owning a slice, you're owning a fixed percentage, a fixed number of the total pie of the output of that company, right? So to take it to a modern example, I guess to make it a little bit more applicable, right? If I am really optimistic on the future, like let's take the thing that every single one of us can relate to, right? So, like iPhones, right? if I'm optimistic on the future and I think that we're going to make more iPhones and we're going to go from a million people to billions of people having iPhones, right? Like the worst thing I could possibly buy would be iPhones, right? Like imagine, you're probably a little too young for this, but I remember when the first iPhone came out, right? You probably remember too, maybe a little bit more fuzzy, but if the day Steve Jobs announced the iPhone, I went out there and I'm like, oh, I'm so optimistic. Well, this is going to be the next huge thing. And I went out there and I bought 20 iPhones to have as my retirement savings. That would not have done very well
Mm,
because the iPhone was the next big thing, but the iPhone has utility value, right? People use it. And the iPhone went from being very expensive to, much, much cheaper, right?
yeah,
And especially in terms of what it could do, right? Like this phone can take pictures 100 times better than the first iPhone. And, in literally a thousand different ways, this thing is better or whatever, right? And so you don't want to own the stuff we're producing. You want to own a share of what you're producing, right? And so obviously, the better idea when the iPhone came out to the world would have been you want to buy a share of the pie of that is the corporation of Apple Computer.
mhm.
And then, if you buy 1% of the iPhones on release date, you're going to watch all your money disappear. If you buy 1% of the company, of the entity that is making the productivity, then you're going to do really well, right? Does that make sense?
Yeah, yeah,
Good,
definitely.
good. So quite literally, a lot of people see the shiny object, they see the iPhone, and they buy literally the wrong thing, like the
Yeah,
worst performing thing. The more right you are about how many iPhones you're going to make, literally the worse your losses are going to be, right? On the flip side. So the point here being that for thousands of years before the stock market, gold was this proverbial fruit representing all the effort. It's like, hey, gold is getting more valuable because in excess of all the energy spending we're using, we're putting more energy into this, right? And the relative value of gold's going up compared to everything else. Okay. Um, and now with the stock market, now over the last 400 years, it's been a very similar kind of concept. Obviously, gold still exists, people still buy it or sell it or whatever, but the stock market has emerged as an additional kind of proxy of trying to price in the future, right? If I want to own a share of the analog energy of productivity, I buy some gold, right? Because I think it's going to be hard for people to make more gold. If I want to buy a share of corporate America, I can, in my retirement account, I don't know if you have a 401k yet or an IRA or anything, maybe you do, maybe you don't, with your, finance class or whatever. But, most, your parents, probably my parents, I know, and, pretty much everybody else out there in America that's has a retirement fund. That's what they do. They own stocks and they own bonds, and both of those things are a statement of faith. Owning the stocks is basically saying, "Hey, these stocks they have no intrinsic value. They are a number on a screen. They're worth nothing. I can't eat a stock, but I'm owning a share of the future excess productivity and profitability of corporate America, right? Or with bonds, government debt in people's retirement accounts, they're basically saying, hey, I think America's government's going to be around 50 years from now or 10 years or whatever. And I'm owning essentially in excess of that. So does all that make sense so far?
yeah, yeah.
Great.
That definitely is helpful.
So what's the problem? What do you think the problem is? What's the dilemma? If all that's what that means, what's the issue here?
The issue, I don't know. Everybody's trying to buy a portion of the companies now. I don't know. I'm not sure.
Right. Everybody's trying to buy a portion, but the problem is, if I'm in charge of the company making the shares and the shares are worth something and I'm the guy in charge, like why would I make more iPhones when I could just make more shares, right? It's like,
Yeah,
if one share of Apple is worth, whatever, a couple $100, and and sure, I could go to the effort. I can make more iPhones, I can make more productivity and sell it to the world and hopefully I'm profitable. I could do that. But if if the total pie of wealth has all these shares to it, it's just it's a lot easier to just make more shares, right? And this is exactly what the US government does. This is exactly what fraudulent companies do, right? Basically, the problem is, hey, when you buy dollars, you are owning a share of the total pie of wealth, right? When you buy a stock in a company, you're owning a share of the wealth, right? And so the implicit assumption here is that that percentage is going to be consistent. I own 1% in the world today. I'm going to own 1% tomorrow. But that's not what happens because the incentive is so tremendous. The more valuable that country or that company becomes, the greater the human incentive to say, these shares are worth a lot. Let's just change a couple numbers on the ledger of all the stocks or all the gold or all the dollars, whatever. Let's just change a couple numbers and give ourselves a larger share, right? So imagine you, Kelton, let's say you own half of the world. Let's say I own half of the world. I could work, I could build more stuff, right? And you're building stuff, you're building all these, amazing robots or whatever, right? I'm building my stuff. I could do that, but I'm lazy. I don't want to work today or whatever. Like, can just give me the ability to control, the numbers, right? And if you give me that control, what happens is that, well, I'm gonna create a couple new numbers and add it to the total pie. But the problem is, of course, if let's say I were to double the number of shares, right? Let's say I add a third share, right? There's your share, there's my share. I add a third one because we need it for whatever reason, right? The problem is that is effectively stealing wealth from you and giving it to myself, right? If you've got all your stuff you actually care about, right? Your robots, your house, your food, your water, your whatever, and I got my stuff, and you've gone from owning half of the total pie to now just a third of the total pie because I have created another share and given it to myself. Does that make
Okay.
sense?
So I'm a little bit confused on that.
Okay,
So how you're saying in that scenario, like you would create another share.
right.
I guess I was thinking that I guess I was kind of picturing a stock or a company's value as a limited resource almost, so you can't just create more. I thought it would be you're like splitting your share or something. Did I?
Yes, yes, it's fraud. It's called
Okay.
fraud, Kelton. It's fraud.
Okay.
It is fraud. Yes, you're right.
Okay.
Yes, you are exactly right. That when the reason why gold's valuable is that you cannot have a fraudulent gold coin, assuming it's actually a piece of gold, right? Like you cannot, like I can't give you a piece of gold and I can't conjure up with dark magic fraudulent at the atomic level. I just can't make it up, right? But the benefit of stocks over gold is that it's digital. It's just a number, right?
Mhm.
And so that's the benefit is that it's much easier to move around than an analog thing. But the problem is that you can commit fraud much easier with stocks, dollars, or political currency, debt, anything that's digital. It's much easier to do that, right? Because you're exactly right. You should only have the ability to create new shares, gold, or dollars as a result of spending more energy because that's what's fair, right?
Yeah.
But when you just create new numbers, you can effectively steal from somebody
Mhm.
without ever having to break into their home, right? You own half the world. I own half the world. I'm in charge of all the shares. I create some new shares without doing anything. All of a sudden, on paper, I have transferred a percentage of wealth from you to me. And so
Yeah.
I didn't have to break in your home to steal your computer, to steal your robots. All I had to do was change some ones and zeros on the Kelton and Luke company. And now all of a sudden I've stolen your ownership of them. And as long as everybody else also still values these shares as 1-to-1, then there's not much you can do. You've been devalued, right? This is when people see with Ponzi schemes. You've probably heard in your history classes about how countries have their currencies collapse or whatever. This is all the same principle, whether it's a currency going into hyperinflation, whether it's the inflation we saw after COVID, whether it's a corrupt CEO that did a bunch of insider trading and diluted a bunch of shares, whether it's, whatever, at the fundamental level, it's all that same problem that if if people are really good at building stuff and we just keep building more stuff. You don't want to save your wealth in that stuff. You want to save it in a share that represents the stuff we're producing. Okay, what's the
Yeah.
best representation of that share? Well, the analog version is gold, has some good things, has some bad things. The digital version of stocks has some good things, has some bad things. And so the question is there a way to marry a digital number having some kind of physical cost to create? That's the question. And that's what Bitcoin is. Bitcoin basically marries the digital nature of stocks with the analog nature of gold. So it's way easier to move around than gold, right? I mean,
Yeah.
again, like 400 years ago, the Dutch were already realizing gold's going to become outdated. Right now, we have the internet, right? The Dutch didn't have micropayments on Facebook or whatever, right?
Yeah. Right.
So that as a general explanation, then I'll explain Bitcoin after this, assuming this makes sense to you. But in long story short, that's why gold generally has value and it trends up over time. That's why stocks generally have value and they trend up over time. The reason why dollars generally tend down in value over time is because the US government has a very, very strong incentive to continue diluting, right? Apple Computer has a lot of money, but they don't have a standing army, right? The American government does, right? America has way more power than Apple, right? And so anyway, does all that make sense? I know you're
Yeah.
looking at this moment.
Yeah.
Okay. Yes?
Yeah. That definitely, like those two things coming together into Bitcoin, I think makes a lot of sense right now. I'm probably going to be confused as we keep talking, but I think, yeah, I mean that.
Oh, yeah, no, you're doing great. I love it. Do you know what cryptography is?
No.
No. Okay. So cryptography basically is just using math. It's a bit more digital, but it's just basically using math to secure things, right? So when people have their passwords secure, when
Okay.
America secures its launch codes, nuclear launch codes or whatever, right? Like we use cryptography to defend things, and we can verify it with all kinds of super fancy complex math. We don't need to understand that, for the moment. We just got to go with the assumption that we don't know how to break cryptography, right? So does that all make sense? You're
Yeah.
following? Yeah. Okay, great. So I know something you said at the beginning of the discussion today was about Bitcoin mining. So I'm going to show you what
Okay.
Bitcoin mining looks like and have a little bit of trust. This will all make sense in just a moment.
All
So
right.
we're going to put in inputs and we're going to get certain outputs. So I'm going to put in here the word hello, Kelton. So I put in an input of all those letters and I got an output down here. Now the output is random. I cannot predict it. This is a cryptographic tool called SHA-256. I won't get into that, but the long story short here is that basically I'm putting in an input and I'm getting in. It's not a random output, right? It's not random, meaning if I
Yeah.
put in the exact same input every time, I get the same exact output down here. So it's not random. It never changes. It's always the same exact output. However, I can't predict it. It's not predictive. And so what this means, it's kind of like shuffling a deck of cards, right? I know that you and I play cards when we were at our family gatherings. So
Yeah.
I think that's a good metaphor here. It's kind of like shuffling a deck of cards, right? That if I give a deck of cards a shuffle, I'm going to get a random output. This it's a useful metaphor, I think. And the reason why I think it's a useful metaphor is that if I put in more inputs and I just keep entering more characters with no regard of whatever, eventually I'm going to give an output like the one I just got here that has a zero in front. You see that? It might be a little small,
Yeah.
but you see that. So I could not predict that, right? Obviously, all these characters were completely random, and I got a certain output with a zero in front. Now, what I have done here is I have shown you, Kelton, and again, this is on, the assumption that makes Bitcoin survive is that math works, math never breaks, cryptography never breaks. That's
Okay.
the assumption. But given that assumption, I have just proven to you undeniably by handing you this input, or excuse me, by handing you this output, I have proved to you that it is statistically more probable that I have put in more inputs than somebody else that did not have a zero in front, right? Like with the metaphor of shuffling a deck of cards, if I'm going to randomly shuffle a deck of cards and I'm going to hand you that deck, and on the top of the deck is the ace of spades, right? The highest card or whatever, or the, in this case, it's the lowest. In this case, aces are low, right? Because it's a zero in front. What you can know in holding that deck of cards is that that is statistically improbable. It was way more probable. It was something other than an ace, right? And so same thing here is that that first character can be any output. Now, um, let's say I were to keep going. It might take a moment. And see, this is taking a bit of effort for me to do. I have to put in characters, um, more characters, and this will all make sense in just a moment. If I can even find one, see how quick I can find it here. Maybe, maybe not. Well, this is more of a proof of my point. The point is that it is more difficult to find an output with two zeros in front than one zero, right? I mean, already I've seen 4 or 5 times a few different outputs with 1 0 in front, but it's really difficult for me to do that right now. I think if I were to keep going for a minute, I would find one. But okay, there's one with two C's, but we're looking for zeros. The point is that, quite literally, I cannot predict this. And so no matter how much smarter I try to be, it's not about how smart I am. It's about how long am I willing to sit here and, like a doofus, type on my keyboard, right? So what that means is that the output, you see, the more statistically improbable the output, you can be exceedingly confident that it took energy to create that output, right? I'm typing on a computer, putting into this algorithm. My computer is running on electricity, and some fossil and some power plant 50 miles from here is being burnt to help me, turn that energy into this output, into this number. Does that metaphor make sense? Or
Yeah.
yes. Okay, good. So um, let me pull something up here to show you. I think this would be useful. So the point is, what secures, it's a very good common question, is what secures Bitcoin? What secures Bitcoin is, and what makes it akin to digital gold, essentially, is that owning a Bitcoin token, owning a Bitcoin or a share of a Bitcoin, owning a unit of the network is a share of the productivity of the result of people spending a lot of energy, a lot of electricity, computing power, ingesting random inputs, trying to get that output, right? So akin to gold, if I'm going to go out into my yard here with a shovel and I just start digging, I got to go through a lot of cubic yards to eventually, eventually get, a fleck of gold or whatever, right? And the same thing is conceptually true here, that I got to go through a lot of randomness to eventually get a certain output that is tolerable within the network. Now, there's a lot I'll skim over here because it's not essential, but I do want to show you something that I think is important to look at. This on the screen here is Bitcoin's blockchain. I'm going to go to the very beginning of Bitcoin. So this is the very beginning of Bitcoin, 17 years ago. So you've got a year on Bitcoin. You've got a year on it. But the reason why Bitcoin's blockchain is secure is because it has this energy cost behind it. If I wanted to go back in time and change the transactions and therefore steal from you and give it to me, right? Like we talked about earlier with the fraud with the shares and the
Yeah.
dollars, right? With America could do that whenever we want, right? Donald Trump or Jerome Powell or Joe Biden or Janet Yellen, people in charge of the US government, they can make more dollars whenever they want because the energy cost between writing 1 0 and 2 zeros is nothing. There's no change, right? For a CEO in the stock market, there's nothing stopping them besides the rules and regulations of the US government, right? But with Bitcoin, if you bought Bitcoin and I wanted to steal your Bitcoin, what I would have to do would be I would have to go back in time in Bitcoin's blockchain and rewrite all of the transaction, or essentially all of the blocks, and the blocks just hold a set of transactions. I'd have to go through and randomly guess all of the outputs to go all the way back in the beginning. Now, this is called a hash. This output, you think of it like a hash. When I say hash rate, think the amount of guesses being made, the amount of the number of deck of cards being shuffled to get that series of aces in front, right? And you can look and see that you see this hash here as a lot of zeros in front, right? In fact, you can see it
Yeah.
very top. That is the hash right here. Actually,
Oh yeah.
um, let me pull up a slate here. So this is the hash from Bitcoin's first block. Have you heard of Satoshi Nakamoto by chance? You might have. He's kind of a famous individual.
What, the founder of Bitcoin
Right. Yes,
or
exactly. So Satoshi Nakamoto, we don't need to know who he is. That's a
yeah.
separate conversation. But the point is, whomever they were, we know that the first block they put, it took a good amount of electricity. He had to run some sort of personal computer for like a couple days to be able to get this done. Because of course, to get every additional zero is, like whatever, 10 times harder than the last one, right? It's like trying to shuffle a deck of cards with one ace in front versus like having 10 aces in front, proverbially, right? And with the rules of Bitcoin's network, every single additional block and its hash is tied into the previous one. I don't have, I don't think it's important to explain how that happens right now. But the point that matters here is that what secures Bitcoin has nothing to do with blockchain. It has nothing to do with its digital nature. It has nothing to do with any of that. The only thing securing Bitcoin's history is you can think of it like a digital archive of transactions. And each batch of transactions is secured by a difficult a number that is very difficult to reproduce. And if the farther back in time you want to commit fraud, the more energy you have to use. All that sort of making
Yeah.
sense.
Yeah. Yeah. I understand like how that makes it more secure.
Mhm.
Um, but so you're saying that the reason it's harder to commit fraud is because I mean obviously those it's so complex and it would take forever or a lot of energy to decode that or whatever. But like we don't have just a powerful enough computer to do that, or it would just take too long or something,
Yeah, that's a great
or it's
question.
just not possible at all.
Yeah, that's a great question. Is it technically possible? Yes, it is technically
Okay.
possible. How probable? It is exceedingly improbable. What I'm about to say is going to sound a little crazy, especially to those listening that haven't heard this before. But to put it in perspective of how improbable it would be, you would have to quite literally, and I'm not exaggerating here, you would have to quite literally assemble a computer that's battery is the sun. Like you would quite literally
Really?
to to break SHA-256, to count to SHA-256, to beat this algorithm, to beat this cryptography, you would likely need a computer that could ingest so many electrons, it would be essentially equivalent to the sun. Not factoring in that computers produce heat, and you would need an additional similarly sized AC unit to
Yeah.
right. So quite literally, it's not an intelligence problem. A lot of people on TV when they say Bitcoin's secured by complex mathematical algorithms on blockchains or whatever, with all due respect to them, they are completely mistaken. What secures Bitcoin is not that it's an intelligence thing. What secures it is that it's just probability and math, and that it's exceedingly improbable. Nobody has ever created a Bitcoin because they solved an equation faster, quote unquote. They've secured Bitcoin because somebody spent electricity to shuffle a proverbial deck of cards to get a certain output that the code of the network would recognize as valid. Does that help a bit?
Yeah. Yeah. It does.
Yes. So again, it's technically possible, but Bitcoin in theory would be the final thing to be hacked. Every other bank account, every government, every 401k, every nuclear launch code, everything basically, it would be akin to like shutting, can some nefarious person shut down the entire internet? Sure. Can some nefarious person launch all the nukes? Sure. All those things are probabilities, and those probabilities have to be mitigated, but the odds are exceedingly low. But the question is, how over time does Bitcoin adjust to account for the fact that we make more electricity, that we make more energy? What I'm showing you, can you see my screen now? What I'm showing you now,
Yeah.
this is what's called the hash rate of Bitcoin. So remember I was saying hash earlier. So when you see this number go up, it means that there are more people using computers, literally quintillions of times a second, to put in a tremendous number of inputs to get a certain output that will be recognized in the next batch of transactions in Bitcoin. And so if we zoom in to the very beginning of Bitcoin, this is the very beginning of Bitcoin in January of 2009. Bitcoin was worth nothing, and then Satoshi was the first person to spend electricity via random guesses to create an output of transactions in Bitcoin's network. So it's a very small amount of electricity, but more and more people join the network, and you can see that the total hash rate, meaning the total amount of guesses, aka the total amount of electricity spent, exploded exponentially. And that has continued effectively since 2009 with some variants here or there, right? And this has been able to scale up indefinitely. So over time, not only not only is Bitcoin's history getting longer as time passes on, but each new batch of transactions, each new block added is having more and more and more electricity behind it. And so the reason why people like myself are really big believers in Bitcoin is that essentially this is kind of like, it's similar to the metaphor with digital gold. It's the same kind of mindset that basically the more energy that there has been spent in securing Bitcoin history, the more justifiable it is to assume it's going to continue to survive in the future because the probability is so low. And that means that since more people trust it, more people are willing to spend their either capital, time, or electricity either acquiring Bitcoin tokens or spending hash rate at mining new coins. And what that does is that creates this feedback loop where because more people trust it, they put in more energy, more electricity. Because they put in more electricity, it becomes even more improbable to quote unquote hack it. I mean, not really hacking, but to commit fraud, reversing backwards, right? And this is essentially a feedback loop that so far has worked for roughly a decade and a half, right? Basically your entire life, right? Going from literally one person on one computer. There's nothing proprietary about Bitcoin. It's an open source piece of code, basically. If this, then that, if this, then that, if this, then that. And the incentive structure, that the feedback loop has just been this tremendous trajectory upwards. And so before I move on, I want to make sure, because I need to check myself. Does that make sense?
Yeah, it does.
Okay, good. So what does that mean when there are all these other crypto coins or tokens, right? I mean, you've probably heard of some of them, right? Or at least you're aware that they've existed, right?
Yeah.
Okay, great. Have you ever heard, by the way, just really quick, have you ever heard of FTX? It's relative.
Uh,
You might have seen it on the news. Maybe,
yeah, I think so, but I'm not.
maybe
I
not. Does that logo ring a bell? This is like maybe
Yeah,
years ago.
yeah.
The news, right? So this is an example of a massive amount of fraud, right? This was a crypto company,
Oh,
a
yeah.
cryptocurrency exchange project, right? As an example on the opposite end, right? On one end, you have Bitcoin, which its security is from energy, similar to gold, right? It costs energy to produce new gold coins, costs energy to produce new Bitcoins.
Yeah.
But FTX on the opposite end of the spectrum, it's essentially like a fraudulent company, right? You had the person in charge of this company, they committed fraud. They created a lot of new tokens that they said weren't there,
Okay.
theft, all that kind of stuff. And of course, it died and collapsed. But the reason I bring that up is to say that why Bitcoin is uniquely interesting to folks like myself and clients of mine, everything else, is because the way this works is that in the ancient world, once people are saving in gold, there's not really an incentive to save in other things, right? It's like, hey, gold's a thing that's valuable. It's what everybody's decided. It is the most finite. It is the most energy intensive to reproduce because everybody's either sacrificed capital in the ancient world to acquire gold, or people have spent the most energy going out there to mine gold, right? I don't really
Yeah.
want to own your dirt. I don't really want to own your copper because you're just going to sell it for gold, right?
Yeah.
It's like winner take all, right? In the same way that Apple Computer was more or less winner take all for the iPhone or the smartphone, it's kind of the same thing with money here. So, point being, if I can zoom out to all time, this is comparing some of the dominant um, cryptocurrency blockchains out there. So, yeah, I'll go to log scale. You know log scale, surely, right? As an engineer, probably.
Yeah.
Yeah, okay, great. So what you see is log scale. In the blue line, that's Bitcoin's hash rate. So you can see over time it's using more and more and more electricity. You have Ethereum in red, and you have a different one in orange. Let's see if I can add Dogecoin. That's another popular one there. That one's in blue. And so what you can see is that not only are these other cryptocurrencies younger, they're significantly younger than Bitcoin, a much shorter timeline.
Yeah.
But more importantly, the amount of energy securing literally any other blockchain, once you zoom out to linear scale, it quite literally does not show up on the
Yeah.
chart. So,
Okay.
the reason why most of these blockchains, most of this other stuff is just hot air is because I can make Luke blockchain. I could type it up like my computer. I could say it has value. I can run a couple computers, but somebody out there with a strong enough computer could take it over, right? But Bitcoin,
Yeah.
quite literally, um, you would need a computer that's already impossible and only gets more impossible every single day that passes on. So does that make sense? I want to make sure.
Yeah.
Good. Okay. So then, of course, the question is, and to summarize this in a video, because I've only been showing you pictures, but this is a video representing what I'm talking about. So um, what you're seeing here is the hash rate for Bitcoin. So this orange section, these zeros, this is the outputs like we were looking at before, right? That's the number of zeros required to secure Bitcoin. So the card of decks is getting longer over time. And I'll zoom through this here, but the
That's
yeah,
so
well,
it's
what do you think? I want to hear your reactions. Like, what do you, as an engineer, like, what are you thinking as you're thinking through this, hearing me drone on and on?
yeah. Well, this is like really interesting. I had no idea, how much. I mean, obviously there's a lot involved with it, but like I didn't know the details like this. So this is awesome.
Right. Yeah.
Um,
Mhm. Go ahead.
I just a question. So, like you were saying before, as you're adding those zeros to the front, that's making it. I mean, it's making it harder to decode, right? I mean, so it's more
Yes.
secure.
Yes.
Um, so how? I mean, like eventually, 50 years or something, aren't you going to have? Well, maybe it already is like 100 zeros before each code or something.
I love
So
it. You had a great point earlier, and this is another great one. Yes, that's the point. Is that
okay,
at every so how do the zeros get added? It's a part of Bitcoin's open source code. The way it's designed is basically if then statement. If people are putting in enough energy, then it gets more difficult, meaning that people have to work harder and harder and harder, right?
yeah,
So the point is that eventually, yes, eventually it kind of blows out to infinity. So, okay, engineer, right? If you want to move a mass, you can move it faster and faster and faster, but eventually at some point well, actually never eventually, you will never hit the speed of light, right? You will never hit c, right? Because anything with mass can never move at the speed of a wave, right?
yeah,
It's the same kind of concept with Bitcoin here, being that you can just keep making it more and more and more probable, and it can literally blow out to infinity because there is an endless number. There are the Bitcoin network's hash rate right now for a real world comparison instead of a chart is about the same thing as about twice the US Navy. And that's happening every 10 minutes, right? That's why it's collectively adding up so much. And of course, to reverse engineer it is even more expensive than engineering it in the first place. But the point
Yeah.
is that with oh, shoot, what was I going to say? I just had my point. Where was I? Oh, um, the thing. All right, man, I really lost my train of thought. What was I just talking about a moment ago?
The like, I'm not sure the you're gonna go up to infinity with those.
Yes, yes. Thank you. So the point is, you can have an endless number of inputs, right? Like we were looking at before. Like you can literally go out to infinity because numbers, there are infinite numbers, right? Infinity is literally impossible to conceptualize, right? There are more numbers than there are atoms in the universe, right? It takes an electron to add one character. And so, quite literally, you can just blow this out to infinity. And this is a theoretical. This will never happen. It will be so improbable. It would take millennia for humanity to get there. But theoretically, you could eventually add so many zeros and make it so difficult to mine new bitcoins, to create new bitcoins. You can make it so cost prohibitive with computers trying to guess it that you would have to go through more inputs than there are, atoms or electrons or whatever in the universe, right? And so the point of all this is that why Bitcoin acts as really good money and it keeps going up and up and up and up and up in price with a lot of volatility, like you said at the beginning, is because basically electricity, this excess electricity that's not profitable elsewhere. A lot of people are basically saying, hey, this electricity is not profitable to use it to turn on my lights this evening. Hey, this electricity is not profitable to heat my home or whatever, right? This is waste electricity. I don't need it. I got to put it somewhere because otherwise it's a complete loss. Let me throw it at some random guesses in Bitcoin's network, and there's a one in whatever chance that I get some reward from it, right? It's the same kind of concept with gold thousands of years ago. I have this excess productivity I have. I don't need it. I got to put it somewhere. I'm going to put it towards something that is going to preserve that purchasing power in the future. And that is essentially what Bitcoin is. People like myself buy Bitcoin because I am of the belief personally that, as much as I may have concerns about the future, I'm of the belief that in owning one share of the future is probably going to be worth more than owning one share of the present moment, right? I would rather, buy a share of the future and hope that we're going to have more people building more robots, more engineers, more of everything in the future. And so owning 1% of a larger pie is going to be better for me than not owning that percentage. And so the reason why people buy Bitcoin, they think that it trends up steadily over time, is because basically they're saying, hey, I think electricity is going to have value in the future. I think that people are going to value electricity in the future. I think it's going to cost something. But again, you don't want to own the electricity because people are always going to make more electricity. We make more electricity now than we did 20 years ago when you and I were young or whatever, right? And we made more electricity than 100 years ago, right? You don't want to own the electricity because the electricity collapses to zero. If you store it in a battery, like it goes to zero, right? It's akin to owning the iPhone, right? It's like, sure, I can think electricity is always going to have value in the future, just like how I can think a smartphone's always going to have value or be valuable, but it's a commodity for use. It's not a commodity that represents an ownership of future commodities. And so, point being, in the long-term future, basically electricity is going to be the utility commodity of the planet. Every AI, everybody talks about AI, right? All the AIs need electricity. They run on electricity, right? All your robots, they run on electricity, right? This computer that we're having a conversation with, it's plugged into the wall, it's using electricity, right? Basically, electricity is the usable commodity, and buying any amount of Bitcoin is buying some fraction of a network that has had electricity spent in creating it slash securing it. And so therefore, basically buying 1% of the Bitcoin network is kind of like buying 1%, quote unquote, of future electricity output.
Yeah.
So I know that might be a bit of a heady concept, but does that kind of connect some dots, make a bit of
Yeah.
sense?
Yeah.
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 like a
That's
question with that, or a reaction? How to what degree is it making sense?
yeah. I'm understanding it as like with your comparison with like the Apple or the iPhone and Apple, like Bitcoin is Apple in that scenario, and then the iPhone is energy. So you're not, instead of investing in um, Apple or Bitcoin by buying iPhone, you're buying the share of um, like what's representing that energy, right?
Right.
Is that
Right.
okay?
Yes. Yeah. Yeah.
Yeah, that's a
Good.
good, it's a really good
Good.
comparison.
So yeah, to put a spectrum on this, and this is important as you go off to college here, literally in a couple of weeks, and you're going to live your life, right? This is the thing they don't teach you in finance class, right? And nothing
Yeah,
wrong with traditional finance and all that, right? People got to own what they understand, right? But in my opinion, right, for you and me, like the difference with us is that we're really young, right? We're going to be around hopefully many, many decades from now, right? And the internet in 1990, 35 years ago, was inconceivable for our parents' generation, just to the degree it would change the world. And my argument today for you being a young person and for everyone watching that is maybe older or maybe has, a good bit of savings or whatever, my argument would be that Bitcoin is going to do to gold and stocks what the internet did to cable TV and newspapers, right? And this is why I work so passionately in what I do, is because I genuinely believe this is a zero sum game, right? This is not a, oh, Bitcoin is going to coexist with the stock, bond, dollar, and gold markets. It is going to basically take them over. In the same way that the internet is a better form of a newspaper, it's a better form of a television show, it's a better form of a radio show. It's like it's not going to be newspaper and radio and telegraph and internet. It's going to be internet. It's going to come for everything because it does everything better than all those individual things did. And to me, this is why for my friends, my family, everybody I work with, I'm a big passionate Bitcoin advocate because I could be wrong, I could be right. If I'm wrong, then Bitcoin dies and whatever, right? I strongly do not believe I'm wrong. But the risk is if I'm correct, then effectively everything trends down over time in terms of Bitcoin, which is something that's a bit counterintuitive. But to give an example here, like I said earlier, the most abundant thing in the universe are numbers, right? Numbers are more plentiful than atoms, right? And so literally everything in the world goes up when you price it in terms of dollars. Your electricity bill goes up, your house goes up, your food goes up, right? People talk about inflation, but this is just the reality of it. There's no cap, there's no energy cost to how many dollars can be created. So you just make more dollars forever. And so therefore the price of everything in terms of dollars goes up indefinitely. There will literally never be an end to it. The first national debt of the United States 200 years ago was about 50 million bucks. We've gone from 50 million to 50 billion to 50 trillion. That's an increase of 1 million X, right?
yeah,
Bitcoin being the opposite because it's a number that's finite and we can verify it's finite because of the electrical cost with cryptography. It means it's literally the opposite. And literally everything gets cheaper in terms of Bitcoin. So this video, this chart I have on the screen here, this is the price of ground beef in terms of dollars on the right and in terms of Bitcoin on the left. So the price of beef, went from $2, $3, $4, right? For our grandparents' generation or great grandparents' generation, it was a nickel or whatever, right? By the time you and I have our own kids that are our age, a pound of ground beef will be 20 bucks, 50 bucks, 100 bucks, whatever, right? And Bitcoin,
yeah,
like I said, it's literally two bookends of a spectrum, right? The most abundant thing in the universe is a number that doesn't cost energy to create. The most scarce thing in the universe is a number that we can't create more of. And everything, including ground beef, is in the middle, and it's trading between those two things. So does that chart I'm showing you make sense?
yeah. Uh-huh.
Okay, great. Um, so yeah, I'll show you one more chart, and then I guess we can wrap up after that. But the best way I think to think of it is that when most people look at Bitcoin, what they see is something volatile that's growing upwards, right? It's like they see the Bitcoin price, right? So I'll show you here is what most people typically care about: the Bitcoin dollar price. On the right side, you see it in logarithmic terms, right? So orders of magnitude. On the left-hand side, you're going to see it in linear terms. So in the very beginning, back in 2010, Bitcoin was once 3 cents, then it was 6 cents, then it was 10 cents, then it was a dollar, right? You see it on log scale on the right. And so
Yeah.
essentially what's happened over time is that, hey, people are willing to spend a lot of electricity on this token. And hey, the more electricity they spend, the more secure its entire history is. Maybe this underlying token is worth something. Maybe this proverbial gold coin is worth something because people are spending a lot of energy digging in the dirt for it, and so the price fluctuates up and down, up and down, up and down. And so in Bitcoin's history, some years it doubles, other years it falls in price, but over time it has continued on this hyperbolic curve where it just continues out,
Yeah.
more or less upwards to the right. And obviously, like you said, I love it that you said at the beginning, unfortunately, our generation, our young peers get sucked into this whole, oh, I'm going to try to trade it and be smart with this. But I don't think that's a
Yeah.
smart thing to do. You just need to be on the right side of the innovation, right? Trying to time Bitcoin is like trying to time 1 month versus another month of the internet, basically like the
Yeah.
year 1998. And you're saying, hey, the internet's going to go up or down. It's like, forget that. Like
Yeah.
the internet's going to become, we're going to do podcasts on the internet, right? And people are going to watch it virtually. So,
Yeah.
and that's the first part of my point is that most people look at Bitcoin as if it's going up. But again, the problem is that everything's going up, right? If you're going to price Bitcoin in terms of dollars, well, quite literally everything is going up, including the cost of beef, of housing, and everything else. It is a flawed way of measuring the world because, again, the fraud that is created when people dilute the number of shares in a given ledger, in a given stock or currency ledger. And so, my encouragement for you and everybody watching today, especially those that are new, is don't think of Bitcoin as a number it's going up. Think of basically everything being repriced in Bitcoin that is trending down. Because, hey, as we
Okay.
build more houses, as we build more, gold miners and we mine more gold, as we build more robots, as we make everything we actually care about in the world more productive and abundant, the amount of stuff you can acquire for one share of that network goes up. And so effectively the value of owning that share of the future goes up. So, in general, that would be why I would encourage you as you go off to college, as you start saving your paychecks, your money, whatever you do, I would encourage you to save as much as you can, um, within reason, save as much as you can in Bitcoin over time, because as long as we keep building things in the world, as long as we keep building stuff, um, basically Bitcoin is going to become more valuable in terms of those kinds of things. And I think that 30 years or 40 years from now, when both of us are mid-age, I think that Bitcoin is going to be the dominant form of retirement savings instead of stocks, bonds, or cash, in the same way that the internet is the dominant form of communication, no longer newspapers, radio, and all that other stuff. So anyway, I know I've talked a lot. I know I've covered a lot of the basic premise. I don't want to take up, I don't know what your schedule is for the evening. It's not like, I don't know. You're not in school yet, right? But I'd love to hear any questions you have, or, if I can clarify anything, I'd love to be of help.
Yeah, that's super interesting. I have a couple questions, I think.
Sure.
So that I can think of right now at least. But so the first one, um, you mentioned or you were talking about how, you know, Bitcoin's going to be, you're predicting Bitcoin to be, sort of in the um, same style as the internet, where it was,
Right.
it's just starting and then it's going to kind of take over all of those things like the stock market um, and what was the other thing that you mentioned in that?
I,
You said stock.
I'm personally, and this is where, we kind of go off the deep end of, oh, you're crazy, Luke, right? But personally, I think Bitcoin's coming for everything. I think that, right now people save their retirement savings in their house,
Oh yeah, yeah,
bonds, stocks. And I think Bitcoin's coming for all of that. I think all three of those things will collapse to their utility value, meaning real estate prices probably fall 50% or more. because at least half the value in homes that's pricing out young people like ourselves is people are using real estate as a form of money because the dollar is a fraudulent form of money, right? Real estate has, it's something physical. You can't print houses as fast as you can print dollars, at least, right?
Yeah.
Anyway, I answered your question then more,
So,
but yes, I think it's coming for all of those.
okay. So yeah, I guess my question would be how like how do you envision that replacing like the market? So like a company's value. Are you saying that they would have like each company would sort of have a cryptocurrency for the company, or it would all be under Bitcoin?
Yeah, that's a great question. Every company already has its own blockchain. It's
Yeah.
basically its history of its trading of its shares. So no, I don't think, so yes, they already have that, but they don't solve the problem, right? You can have somebody change it. The company CEO would
Yeah.
change it if they could, and if the government allowed them, they definitely would, right? So so I think people are going to say, hey, why, so there's the S&P 500, which is the primary index of stocks in the United States. When you hear people say, hey, I'm saving money for my retirement in the stock market, they're probably buying the S&P 500.
Yeah.
They're buying a share. When they buy a share of the S&P, they're buying a share of a pie of the top 500 publicly traded companies in the United States. But in the future, people are going to say, why would I give my energy to own these pieces of paper, right? These numbers, these shares of companies that can dilute their shares. Sometimes they do, sometimes they don't, right? For various reasons. But why would I do that with a moving number of units that only has exposure to the upper fraction of America's economy? With Bitcoin, everybody in the world uses electricity, not only America, and not only the top level, the whole world. So ironically, owning Bitcoin is a greater diversification than owning American stocks because you're getting a much wider basket. So all I have to say is that
Yeah.
no, I do not think that every company is going to have their own blockchain, because if a company can create its own blockchain, then it can be hacked. It can be destroyed because they can just make it. In fact, many companies have made blockchains, right? I gave that example earlier of let me see if I can pull it up here again, for those that may not remember until they see the logo jog their memory. So FTX, for example, they had their own blockchain. Another one that's unfortunately still out there is called XRP. That one also is made by a company, right? And these coins, these blockchains, so they will be made. To answer your question, they will definitely be made, but they don't survive. They often collapse in fraud because it's the whole problem that Bitcoin's trying to solve. You're
Yeah.
creating these tokens out of thin air with no tie to the real world and energy. But hey, if we can make this algorithm in digital space that let's tie electrical cost to a given output and as a monetizable token, and then just from a feedback loop, it kind of takes over everything, just kind of like gold did a few thousand years ago. So anyway, did that answer your question
Yeah.
there?
Yeah, that's awesome. Um so my other question then is kind of a little bit different
Sure.
topic. So how would you recommend since I'm trying to get into this early for me at least,
Yeah.
um like how would you recommend getting getting involved in this and investing in it?
Yeah.
And like yeah.
Mhm. Yeah, well, yeah, I'll help you with that. As promised, I'll give you $50 of Bitcoin. You'll actually be very surprised. I've invited many, many, many people, dozens of people, on to do this and offered them $50. And like less than a third of them actually say yes. So I'll give you
Okay.
$50 of Bitcoin. But what I'll do when I help you set it up, and for anyone watching that's new to Bitcoin, what I would recommend is that if you are like genuinely brand new, like you're getting first $100 or whatever, I would recommend setting up what's called an exchange, where you buy Bitcoin. So in the same way, there's like a physical store where you buy or sell gold. It's like a digital exchange. You buy or sell Bitcoin on that. I would suggest, hey, you take that Bitcoin, you let it just sit there, and then whenever you want, buy buy some more, right? When you put money in there, put money in there that you're thinking of saving for the long term, right? So even if it's just $10 a week or $5 or whatever. I remember what it was like being, in high school, not having any money, right? So I don't know, the numbers are relevant, whether it's $1 or $100 a week. The thing that's important, in my opinion, is getting the habit of, buying a couple dollars a week or a month or whatever, whenever you can, in that exchange, and then sit there. And then, again, as long as people continue spending electricity for Bitcoin and Bitcoin continues to survive and math as we know it doesn't fundamentally break,
Yeah.
then that's just going to, over time, with volatility, be worth more and more and more.
Yeah.
So that would be what I recommend for you setting up. Yeah, I'll walk you through that when we're done with the recording here. But I would say just set it up, let it sit there. And as you know, that's what I do for work, is I help people that have a very large amount of Bitcoin increase their security and planning and all that. But yeah, that'd be what I recommend. Just keep
Yeah.
it simple. You let it sit there. You'll have the $50 of Bitcoin. That'll grow to $60, $70, $80. Also, if you're putting in, whatever, $10 of excess savings,
Yeah.
a month or a week or whatever, right? You're gonna, in a couple of years have a sizable amount of money. So
So you'd recommend just consistent investments, just kind of like, I mean, I do have some money in the S&P.
oh really? Oh my
Yeah.
gosh, here I am like explaining the S&P to you. Oh my gosh.
Well, but
I am sure.
I don't understand it as in depth as I should though, so that definitely helped. Um,
Most people don't.
yeah.
Well, good for
I mean, I
you.
kind of
Well, heck.
understand
Hey, that's
investing,
awesome.
but I mean, that's not. Yeah, I'm glad you gave that explanation though, because it really helps, understand what I'm actually putting my money into. So,
Yeah.
um, but yeah, um, yeah, that's nice to know though. Just consistent investments in it. Um, yeah,
Yeah.
that's
Yeah. Yeah. Again, back, to, I guess, to give the visual example again, again, think of it like the inverse of the dollar, because it quite literally is the inverse of a dollar. The dollar is just a number. We made it up, and there's no cost to making more, right? Likewise, Bitcoin is just a number. We've made it up, just like the S&P, just like
mm,
every single person's bank account. It's all just numbers. None of it has intrinsic value. It's all fugazi, right?
yeah,
Difference with the Bitcoin numbers is that we can't make more. So in that sense, it is opposite to all the other sets of numbers. And so my point is, I would suggest, yes, slow and steady action over time. But the other thing to keep in mind is that, dollars are never going to be as valuable again in general as they are right now, right? And likewise, on the opposite end of the spectrum, Bitcoin will never be lacking value to the degree it is right now ever again, right? Like in general, with volatility, the dollar trends down over time. In general, with volatility, Bitcoin trends up over time. And the only reason Bitcoin has more volatility than the dollar is that it's a smaller system than the internet, right? 30
mhm,
years ago, the internet as a network was way more volatile than traditional media and newspapers because it was way smaller. An entity that's smaller has more volatility, right? Now that the internet's the big thing and everybody uses it, the internet's the big thing. It's pretty stable, but newspapers and traditional media, you know, analog film, right? All that's very volatile because it's trending down on its way up to zero, right? So right now, Bitcoin's more volatile on the way up. Dollars are less volatile on the way down. Probably 20, 30, 40 years from now, maybe sooner, maybe later, I don't know. But at some point in the future, every other market that's not Bitcoin, believe it or not, I think will become more volatile than Bitcoin as it, similar to
yeah,
news, fizzles out, right? People 50, there'll be way more wealth in Bitcoin 50 years from now than the stock market. And therefore it'll be less volatile. So
yeah,
yeah. So yes, consistent action along with understanding opportunity cost of, a little bit of action younger is way more important than a lot of action later, right?
yeah,
I love to hear that you're already investing in stocks. I was about your age when I got into investing in finance and in the stock market. I was, I
yeah,
think, 16 or 17. So anyway,
yeah.
that's awesome. Um, any final things I could help clear up, or things you did appreciate, things you did learn, questions you have? Um,
Yeah.
anything else?
I think I'm just gonna ask one more question.
Sure,
I
that's okay. You can ask.
Um, this one, so I mean, like based on what you said and how I'm understanding it, it seems like this eventually it would be, this would make sense to be um, almost like the internet. It's just the obvious future, you know, because companies can't just create a share of the Bitcoin and decrease your percentages like that. So why would the reason that it would not possibly be successful, Bitcoin, do you think it would be because of just because of like company greed or government regulations, or like are those the main things that would be stopping it, do you think? Or
That's
do
a
you,
great question. That's a great question. We could talk about all the wonderful unicorn fairy dust. Oh, this is going to work, but that's a great question. How could it possibly not work? I have obsessed over this, and I could tell you I've obsessed over every possible way Bitcoin could be killed. And I can tell you I do not know how to kill it. This is an
okay.
asset. Bitcoin in total is an asset worth $2.5 trillion. Any person on the planet, because Bitcoin's open source, it's all open code. Anybody can download it and look at it. Right? It's a $2.5 trillion pile of money just sitting there, and nobody has stolen it. And
Yeah.
I can give you 20 different ways people wonder about Bitcoin being killed, and I could try to debunk every single one. But just simply put, it's $2.5 trillion sitting on the internet. Nobody's stolen it yet, and I don't believe anybody ever will. And the incentive is definitely there. But simply put, what do I actually think is the biggest threat? The biggest threat would be the end of the internet. If I were an evil person that wanted to kill Bitcoin, the most effective way for me to do that would be to kill the internet or the electric grid. The problem is it would have to be a permanent kill. I couldn't like turn it off and turn it back on. As soon as you turn
Yeah.
it back on, Bitcoin's fine, because people just plug back in and run it back up. So it is
Yeah.
possible. It is definitely possible that Bitcoin goes to zero and it becomes worthless. It's definitely possible. However, in my opinion, Bitcoin would be the last archive of information on the internet to go. Every bank account would go, every stock market would go, all other data would be wiped because it's on a smaller number of computers and it's not secure with cryptography in the same way that Bitcoin is. So it's absolutely possible. But for me personally, if that was a legitimate concern, I would rather be saving my purchasing power in weapons, ammunition, food, water, seeds, stuff like that, right? So,
Yeah.
um, anyway, that's kind of a cop out answer. It's not really a direct answer to you, but yes, as far as every potential concern, what about AI? What about quantum computers? What about the government banning it? What about this? What about governments have banned it before. The CIA tried to kill Bitcoin. China tried to kill Bitcoin. Vladimir Putin tried to shut down Bitcoin. Terrorist organizations have tried to kill it. People have tried for 15 years. Every hacker, every terrorist, every government, would love to have a pile of money stolen. And there have been thousands of attempts to kill it. Not a single one has succeeded. And an irony, and this is, and I think this is also important to mention. The irony is every attack, ironically, makes Bitcoin stronger. Because to attack Bitcoin, you have to spend electricity to try to
Oh
kill it.
yeah.
When you
Yeah.
spend the electricity, you just make it even more improbable.
Yeah.
So when you hear people like myself make the YouTube videos and we say Bitcoin's a black hole, blah, 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 this is why I say that, right? If you throw energy at if you throw a standing army at the US Army, you probably can weaken it. If I invade a CEO's headquarters and make them print more shares or whatever, right? Like, metaphorically, right? Like then I could do that, right? But with Bitcoin, the irony is that the more I attack it, the more difficult it becomes for me to win in that attack. That is the irony that I've studied a lot of the different attacks, and I've yet to see one that had any promise of coming anywhere close to succeeding. So
That's so interesting.
yeah, yeah. I think I think right now Bitcoin is viewed as the young person's game of like the higher risk, higher reward thing. But I think especially for like people in our family, for our peers, for our friends, our coworkers, or loved ones, right, the penny that it's going to drop, I think, is people are going to realize, oh my gosh, Bitcoin's lower risk, right? is it lower risk or higher risk to be in the internet, or to own a share of the internet? Not owning a share of the internet stocks, owning a share of the network of the internet. Two totally different things, right?
Yeah.
um, it's lower risk to be in the internet than in newspapers at the dawn at in the 1990s or 2000s, right? And likewise, the thing I worry about is this whole AI boom, right? I mean, you've heard of AI, surely, right? Obviously, and most people have. But what's going to happen? In my opinion, what's going to happen is that more and more labor is going to become automated with AI, and it's going to get better and better and better. What is the one thing the AI needs to live, quote unquote? What is the one thing AI needs to run? Electricity. And essentially, essentially, Bitcoin is the money of the AIs. Bitcoin is the only money that the AIs are going to use. They can't use gold. They won't want to use the S&P. As we design
Yeah.
software to automate the world, it's all going to be denominated in Bitcoin. And pretty soon, I think within, the next 1 to 10 years, more and more people are going to start to realize, oh, the stock market's not lower risk than Bitcoin. Actually, it's higher risk. It's less secure. It's got less energy defending it. And 30 years out, the majority of labor is going to be automated by software we write, that we call AI, right? And, I would rather own a share of that future, and Bitcoin's a better representation of owning that future than owning a share in some corporation or assortment of corporations. So anyway, that might be a bit out there. I don't know, but that would be
Yeah.
my very strong opinion. And that's why I think it's important young people think about this, because this is going to be in our working career. I think this is
Yeah.
going to be well before we're 50 or 60 years old, or especially you. So does
Yeah.
that make sense? Is that,
Yeah.
yeah? Okay.
Yeah. Yeah.
Good. Good.
Yeah, it's
I mean,
so, I mean, I had no idea about the whole world of all of this.
yeah, it's a whole thing. But the beauty of this, Kelton, is that every single robot you build eventually gets monetized into Bitcoin, right? You're going to go to college next week or whatever. You're going to get a great job. You're going to make a bunch of money because the world needs more engineers, right? Actually, as a side note, a lot of people in Bitcoin are engineers. A lot of the most famous people in Bitcoin are engineers. Michael Saylor is one of the most famous people in Bitcoin. He's an engineer. A lot of my clients are engineers, right? So it's very funny that, you know, of all the offers I've extended for people to come on the show, of course, the young engineer comes on the show. But
Yeah.
anyway, the beauty with this is that you're going to get a job, you're going to make a bunch of money, you're going to save it in Bitcoin, you're going to get richer. But every robot you build, every piece of software you write or whatever, you're building those robots. The more successful you are, you put those robots into the world or whatever, or you work for a company that puts them in the world. All that productivity is going to flow to the world. It's going to flow to me. It's going to flow to my kids. It's going to flow to the world, and that's going to be priced in terms of Bitcoin, because basically you're putting in the effort of the muscles of the organism, and Bitcoin's that fat storage. So anyway, all to say is that that's the irony with owning Bitcoin, that to me is really cool, is that basically you're buying a share of what everybody else is working on right now. So yeah.
Yeah, that's incredible. Well,
All
I
right.
think I think I'll end my questions there then.
Okay. Well, hey, thank you very much. I'll send you that Bitcoin show, how it works. Thanks everybody for watching this conversation. Hopefully it was useful to you. Please share it with those in your life that would like to hear, this kind of conversation, especially for people that are new. So thank you.